All right, today we're going to tear into a really fascinating and super detailed report on a company that's become a huge name in the crypto space, MicroStrategy. And believe me, this report does not pull any punches. It comes right out with a bold sell recommendation. So let's dive in and figure out exactly why.
This one sentence right here, this is basically the entire story in a nutshell. It's dramatic for sure, but it perfectly sets up the core argument that MicroStrategy's whole reason for being is now under a direct and, well, existential attack from a brand new and arguably better product.
So, to really get our heads around this, we're going to do things a little differently. We're taking an answer first approach. We're going to start with the big conclusion, and then we'll work our way backward, unpacking all the evidence piece by piece to see just how the analysts got to such a strong, confident call.
Okay, so right at the heart of this whole thing is a fundamental identity crisis. What is MicroStrategy anymore? Is it the business intelligence software company it was for decades? Or has it morphed into something completely different? Basically, a publicly traded vault for Bitcoin. Getting this conflict is absolutely key to understanding its valuation. And just look at this. It's like two totally different companies living under one roof. On one side, you've got the original software business, revenues are down, margins are shrinking. It's not exactly a growth engine. But on the other side, you have this absolutely colossal Bitcoin treasury, worth tens of billions of dollars, which the report says is now the company's real mission.
So this leads to a question that just seems, well, it seems impossible. If your main business is actually shrinking, how in the world could you possibly report a profit margin of over 1,000%? It just doesn't make any sense, right?
Well, the short answer is it's not real profit from their operations. It's kind of like accounting magic. See, a recent rule change now lets the company report the rising value of its Bitcoin holdings as income. So when Bitcoin's price goes to the moon, MicroStrategy gets to book these massive unrealized gains on its income statement. It makes traditional stuff like the PE ratio totally useless. And if you thought that was weird, check this out. This number is their free cash flow over the last year. So despite those massive profits on paper, the company is actually burning through a mind-boggling amount of cash. And all that money is going to service debt and, you guessed it, to fund their number one mission, buying even more Bitcoin.
Now, let's be fair here. For years, there was a really powerful, really logical reason to own this stock. Investors weren't crazy. They were willing to pay a premium because they saw MicroStrategy as a genuinely genius way to get exposure to Bitcoin before there were other easy options. The whole bull case really came down to three things. First, this idea of intelligent leverage. They brilliantly used cheap debt to just keep stacking more and more Bitcoin, trying to juice the returns. Second, you didn't pay any direct management fees like you would with a fund. And third, and this was huge, being in big indexes like the NASDAQ 100 meant tons of passive funds had to buy the stock, creating constant demand. But then, the game completely changed. The report argues that a new challenger has walked onto the field, and it poses an existential threat to MicroStrategy's entire model, pretty much making that old bull case obsolete. And that challenger is, of course, the spot Bitcoin ETF. It's just a simpler, cleaner product. It's a fund that holds the real thing, gives you direct one-to-one exposure, and you can buy it in any normal brokerage account for a ridiculously low fee. It's all the convenience MSTR used to offer, but in a much, much more efficient package.
This brings us to the premium. For years, investors were willing to pay this much extra, about a third more than the actual Bitcoin the company held was worth. It was the price you paid for convenience. But the report's argument is simple. With ETFs here now, why would anyone pay that premium anymore?
I mean, when you just put them side by side like this, the difference is just crystal clear, isn't it? The ETF is way cheaper. It gives you direct, unleveraged exposure, which means lower risk. For any investor who just wants to own Bitcoin, the ETF just looks like the superior product on almost every level.
And here is where the risk gets really, really scary. The report talks about a flywheel in reverse. That same leverage that was so amazing on the way up, well, it's a double-edged sword. In a crypto downturn, a falling Bitcoin price could absolutely crush MSTR stock, which could create this vicious downward spiral. It's a terrifying thought.
So, beyond the whole ETF theory, the report points to some very real evidence that supports this bearish view, and it comes from the people who should know the company better than anyone, its own top executives.
Just look at the insider trades over the past year. The number of times insiders have sold shares,
completely dwarfs the number of times they've bought. I mean, the trend here is just undeniable. Insiders are taking their money off the table.
And here's what that looks like in share count. Over the last year, insiders have sold a net total of over 185,000 more shares than they bought. We're not talking about a few small sales here. This is a significant, steady flow of stock out of the hands of the people at the top. And look who's doing the selling. This isn't just some junior employee. We're talking about the company's general counsel and its chief financial officer, literally the people with the deepest possible insight into the company's finances and risks. And they have been selling consistently.
Yeah, the report doesn't mince words on this one. It calls this disconnect between the company's public all-in strategy and the executive's private financial decisions to sell stock a significant red flag. It suggests that what they're saying and what they're doing with their own money don't quite line up.
Okay, so let's tie this all together now. The report builds this really compelling case for why MicroStrategy's crazy high valuation and that premium it trades at simply can't last in this new environment.
This chart just says it all, doesn't it? The valuation disconnect is just staggering. MicroStrategy's price-to-sales ratio isn't even in the same universe as a peer like Salesforce. This is the clearest sign you could ask for that the market does not care about their software business. It's being valued as something else entirely. And this is really the final takeaway. With ETFs now offering that easy, convenient exposure to Bitcoin, the only real reason left to own MicroStrategy is if you are specifically looking for a high-risk, leveraged bet on the price of Bitcoin. It's gone from a convenient proxy to a purely speculative vehicle. And so it all comes down to this. The sell recommendation is built on these 4 pillars. The ETFs are simply a better product. The stock's premium just isn't sustainable. The leverage creates this massive downside risk. And finally, the insiders are voting with their wallets. It's a pretty powerful, multi-layered case. And that leaves us with this final question to think about. In any market, in any industry, when a new product comes along that does the same job, better, cheaper, and more simply, what happens to the old way of doing things? What is a proxy like this really worth anymore?